Check, please.
Welcome to Everything Money. In this video, we will talk about Facebook and the new Metaverse. We'll talk about the financials of the company, where we think the stock price will be headed, some exciting new ventures involving this brand new platform. We'll go over it all. We'll use our software and the stock analyzer tool to show you what we should be paying for Facebook and Meta platforms moving forward. And we'll show you how to trade this company at the end of the video. If you're interested in trading stocks at a quicker pace, Mo will show us how. I give to you, Paul and Mo, two guys who own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll give us a mindset about investing in the Metaverse. Here you go. Paul, welcome in.
All right, thanks, Seth. So guys, first off, follow us on Instagram, Everything Money Investing. And then don't forget to follow our personal accounts, Seth, Mo, and I, because we have some really good matching pajama photos from Christmas. Seth is just busy.
One person has those.
So Paul, I got this explained to me. So there's basically three stages of the internet that's gone on in this world. And stage one was viewing. So the first few years we went on things and just read. Stage two, we started buying, selling, interacting. They're saying that the Metaverse is the beginning of this stage three, where we're going to go in, we're going to buy land in the Metaverse, we're going to transact, we're going to have group meetings, and so it's exciting. But I'm finding other articles that's saying it's already sort of very, very iffy. You know, it's kind of it's a very speculative play, and I know you're not into this. So describe your thoughts on this new Metaverse moving forward.
So I love it. Imagine this world of me, you, and Mo want to get together and just play cards at a table instead of getting in our cars and driving all the way across town. The other thing is, imagine a world in which the Midwest is suddenly really awesome because it's inexpensive to live here. And if you can interact with somebody face to face in California, why would you ever move to California and spend all that money on the real estate? Why would you not just stay near your family? So we're going to be able to sit there, and at some point, we're able to sit there and feel each other around, like basically be able to like feel ourselves right in front of each other. And isn't that pretty much all we're doing now? This is all big one simulation anyhow. So all we're doing here is a simulation. So all we're doing is a simulation within a simulation.
I'm seeing articles like one is entitled "The Metaverse Land Rush is an Illusion. It's Overhyped." Wall Street. There's another article that said Wall Street's pumped about the Metaverse, but critics say it's massively overhyped and will be a regulatory minefield. So I'm guessing, Paul, although your excitement, which I'm actually surprised you're excited about something like this. I mean, the prospect of a new company, because typically you like to let things sort of equate out, but it seems like
we're talking about an idea versus in stock price. It's very different things here. I'm not talking about the companies that do it and their stock price. I'm talking about the actual idea of the Metaverse. It's like the internet. I wasn't anti-internet 20 years ago. I wasn't anti-Amazon 10 years ago. I was very pro-Amazon. I'm not anti-Tesla. I'm anti the investment in Tesla. So at these valuations. So remember the complete differences between stock, company, and idea. And the Metaverse idea, I just love.
I think too that, you know, following the Metaverse, there will be companies involved that have to power this thing. So chip companies, NVIDIA and Qualcomm, 5G platforms, AT&T, Verizon. Yeah, they're all going to play a role moving forward. But regardless, Paul, let's get to our 8 pillars. We'll look at Meta, ticker symbol FB, and get after what we do is our initial stock screener to see what's going on with this company and the stock price. Go ahead, Paul.
All right, so here we are on the Everything Money software. We're going to the 8 pillars tool. We're going to type in Metaverse.
I think it's still FB, Paul.
FB.
Oh yeah, it just still pop up. Oh, Meta Platforms. That's why. I'm sorry. The company's name is Meta Platforms. I apologize. All right, so oh wow, the stock is back up to 343. Mo and I had sold some puts in the 270, 280. Mo, did you do 300 too?
I did 300. Yeah.
I think I did 270 and 280. So it looks like as of this very second, the options are going to expire if things stay this way in 3 weeks from now. But, you know, anything can happen because look at how quickly this fell. This can fall pretty quickly. I mean, we have a 52-week low of 244 back here. That's only 1 year ago, guys. That's insane. All right. So Meta, almost $1 trillion company. It's $970 billion market cap. Pillar number 1, we want the 5-year PE under 22.5, 40.89. That's high. However, remember, if the company's able to grow revenue and profit very quickly, you should pay a higher multiple. So this is in and of itself does not say it's overpriced. All right. Pillar number 2, we want the 5-year return on invested capital greater than 9%. Go over here, it's 14.3%. That is awesome. Okay, so these guys do a great job of making a cash flow return on their invested capital, which is debt and equity. No dividend, which is not surprising for companies that are still growing and try to reinvest back in themselves. 5-year free cash flow, almost $22 billion, and last year's free cash flow of $36 billion. That shows a lot of growth. But so far, we have 1 check and 1 X. Pillar number 3, we go to the income statement. We want revenue growth over the last 5 years. Very first line, $35.8 billion to $109 billion.
Incredible.
So remember, they did enough free cash flow last year equivalent to their entire revenue in 2017. That's incredible. Pillar number 4, we want net income growth. So we scroll down our income statement, 15.23 to 40. So look at this big growth. We're talking about almost tripling profit in the last 5 years. So if we believe this growth will still continue, or even if it's a slower pace, but still a high enough pace, that would justify a higher PE. So don't get just stuck on the PE. You should get stuck on high PEs if the growth rate's low. And we're going to use our stock analyzer tool to really show us what the stock company should be worth today based on these assumptions. All right, pillar number 5, we want shares outstanding staying the same or decreasing because we don't want to be diluted as shareholders. So we go to the bottom of the income statement. 5 years ago, 2.9 billion. Last year, 2.81. So check mark there. Not much buyback, but still some.
Nice.
Yep. Now, pillar number 6, debt. Guys, you need to look at the debt of a company the way you look at the debt personally. The more debt you have, the more risk you have of bad times when things go poorly. So what do? We go to the metrics, the main page of our software. We look at the 5-year average free cash flow, 21.5 billion. We multiply that by 5. That's 107.85 or $9 billion. So we want $108 billion. We want the long-term liabilities under that $108 billion. So we go to the balance sheet of our software. We scroll all the way to the bottom. Long-term liabilities.
18 billion. What are they doing?
They couldn't try to go bankrupt. Like literally, if they tried really hard and said, how do we go bankrupt our current balance sheet? They literally could not. This is incredible. I mean, Steph, how often do we see this?
Yeah, a tenth of their free cash. That's just incredible.
Yeah, I mean, it's not that low, but still the bottom line is it's low. All right, pillar number 7 and 8 have to do with free cash flow. So we go to the cash flow statement. Remember, free cash flow is cash from operations less your capital expenditures. You can use that to do 5 things. Pay dividends, buy back shares, pay down debt, buy companies, make acquisitions, and reinvest back in yourself. So this cash flow statement right here, we added this free cash flow line here to make the math easy for you. Cash from operations less your capital expenditures. 5 years ago, 15.74. Last year, 35.81. Check mark there. And our final metric is we take the 5-year average free cash flow, we multiply it by 20 as a starting point for a value for the company. So 21.55 times 20 is $430 billion. So we want the market cap under 430. It's 960. That's an X. And if we go to our 8 pillars tab here, it shows this. Seth,
yes.
Mo, what do we see here?
Valuation issues. That's it.
That's it. So this is the kind of company, guys, and this will be part of our software soon. You can add it to a watch list and set a trigger. That way, when it gets to a certain price point, you'll be notified so you can pay attention to the stock. The stock is just, from the 500-foot view, expensive. But now what we're going to do is we're going to use our stock analyzer tool, which has been an unbelievable success on the software. Every investment's the present value of all future cash flows, and we don't know the future, so we have to make assumptions and hope that those things play out. And my job as a value investor is to make conservative assumptions. So first thing I do is select my years of analysis. I think Meta will be around for a long time, so we're going to do 10 years analysis. Now, revenue growth. Now, Mo, we talk about revenue growth all the time here. Obviously, I'm going to try to guide you on where I want to go. I want to pick a low number, which is like, listen, they're not going to go below this number. And I want to pick a high number saying, you know what, if they do some things pretty well, they'll hit here and somewhere in the middle. So give me your all day low number. You're like, okay, if things went poorly, I think they'd grow revenue at this percentage.
15%.
Okay. Highest one. What do you think if they crushed it, what they get to?
30 to 35%, somewhere in that range.
So I just want to make note though.
But don't forget,
Yeah.
I'm incorporating this metaverse, which is basically a new world coming into this. That's my definition of crushing.
That would mean in 10 years, their revenue would have grown up 20 times.
Well, if this is a brand new thing and it actually takes off like the internet did, it's possible.
Okay, I'll put it in there. I don't agree with Mo, but we'll go somewhere.
I'm saying this is like the best assumption ever, that this thing is what it is being projected to be, and this actually works.
Okay,
my high end is crazy.
But what's the world of Meta? What do they calculate to be worth in 10 years?
Oh, I don't know, but I mean, just based on I read 2 articles last week that somebody bought property in the metaverse for 2.5 and 3.5 million. I know. I have to think that Facebook is going to be getting a cut of this real estate, and Nike and Adidas stores are already talking about how they're going to go in there and sell things in the metaverse and stuff. They're going to get a piece of all of this. They've created this world. You're right.
Okay, so I'm going to do 15, 25, and 35. My personal would have been 15, 20, and 25, but we're going to go with the Mo number here.
I think that's more, yours is more realistic. Mine is if all the hype dorks get their way.
So I'm going to do 20% in the mid-range. Even though it's not in the middle, I'm still going to do 20%.
That's
all right. What about profit margin, Mo?
I think they'll probably stay around this 33%, 32%. So maybe 31, 32, 33 or something. I think it can go up.
How about 31, 34, 37? Because if you're right, I think their profit margin will increase as they do the metaverse, because it's not going to cost that much.
Good point.
All right, free cash flow margin. Let's do 30, 32, and 34. PE. Speak to me, bro.
I mean, 18, 20, 22.
And guys, we always do 12.5% return, because if you invest in an ETF, you'll get 9 or 10%. So in order to invest in individual stock and have margin of safety, do 12.5. So we hit the analyze button, and guys, the current stock price is 343.
Wow.
Look at this. If Mo is right, this stock currently is worth $2,400 a share, where you should pay for it today. Oh, we just got, okay, so go back here.
I mean, you're buying a whole new world, so.
So right now on the low end, guys, this stock is a buy today. Now, based on the assumptions before that we did, we came up with like a number of 280 to 300. And that's the thing you're going to see in our videos, guys. We're always doing different assumptions on different companies, on the same companies all the time, because the whole idea is you want it to be so obvious to you that it's a buy. Mm-hmm. And Facebook, to me, at this price, isn't an obvious buy, but it's probably a buy, is my comment, if I were to be a buyer of stock right now. Now, for me personally, I'd still rather... I'm going to sell some puts on it and generate some income as I build a position like I did with Alibaba, as opposed to just go full out and buy the stock right now. Seth, does that make sense?
Yeah, it seems like when I hear that, I think, well, let me think about this. I think I should go buy some. I'm not fully into the options game. It's probably something I'm hoping to learn this year in 2022 is get into options and be a little more patient for a buying price. But it seems like, Paul, I guess I'm surprised, because it seems like there's a lot of what ifs, or is this already inevitable? Some of the articles I'm reading is like, there are no what ifs. The metaverse is already here. No.
But remember, we had the same thing occur with the internet 20 years ago. Like, hey, the internet's here. It doesn't mean you can't overpay for that. Mo, what are you going to say?
No, it is what ifs. I mean, back 20 years ago when the internet was coming on, it was still what ifs. It's not like, yes, the what ifs turned into truth. It's not saying that the metaverse, to have two things within a 20-year period turn out to be these massive of things, and the what ifs all turn out, is not very likely. Wouldn't you agree with that, Paul?
Yeah, I would. So let's even do that. Let's do revenue growth. Let's say 10, 15. Let's do 10, 15, and 20% revenue growth and see how much it changes our numbers. There's our 280 number to 300.
There you go.
Yeah. And I think that's what I was doing with the low end of the range there, probably in a previous video. So, but here's the goal, guys. Here's the good news. If you think they're going to go 15 to 20% revenue growth in the next 10 years, and all these things play out, you got to buy this stock all day.
Yeah.
All day. If all of these things play out, you have ample margin. You got a great return on your investment. All right. And so this is why the stock analyzer tool is so great, because you can put your assumptions in, play around with them, be conservative and be aggressive. And that way you can see a range of what you think the stock is worth on your own. You don't have to sit there and wait for our videos.
If you're looking to get the software behind Paul, he'll show you right now how you can grab it. You can have it in minutes and start making better investing decisions. Go ahead, Paul.
So guys, we made this software because we got so many requests from our subscribers saying, hey, how do I analyze my own stocks without having to wait for you guys? So we said, okay, let's just invest hundreds of thousands of dollars and do this. So we created our software. It includes everything you saw already. It's all in a mobile app. So it's already ready for your mobile phone, fully ready to go. You've got all the 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive daily content. 1 to 3 videos per day from Seth, Mo, and I, only for the subscribers of our software. Plus, you get everything here that's coming soon. This is all coming soon. Get it all here, available for you. But most importantly, the biggest thing you get is we have a community of over 6,000 people who use our software every single day. You can talk to them about all your investment ideas because a lot of our users felt alone thinking about investments a certain way. And that's why they gravitated to our channel. But now it allows them to go talk about any investment ideas, including crypto, with people in the community, bounce ideas off each other, make all the decisions you want. And this is all for only $1 per day. $1 per day gets you all of this. If you can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it will lead to hundreds of thousands, if not actually millions of dollars in extra net worth for you for only $1 per day. So 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com is we aren't big enough yet to charge a sales tax, so you'll save on the sales tax for quite a while. So again, guys, $1 per day, sign up, everythingmoney.com.
If you're looking to trade meta platforms at a quicker pace, our fearless leader, Mo, will show us how to use the charts. Mo, take it away with those charts, baby, how to trade.
So it looks like the other day, I didn't even notice this. They had a little bit of a gap up there. So this will more likely than not come down. We're running right into our 100-day moving average. I could certainly see this thing. Let's look back. Let's zoom out here on a swing trading chart just a little bit and blow this up. Hold on 1 second. There we go. So the last couple times that it has challenged this 100-day moving average, this blue line, it's failed. It failed here. So it's coming back into that again. And the fact that we're challenging it again with this type of decelerating volume over the past week or so, which is not surprising. We're recording this right after Christmas. So it's probably going to bounce off its 100 and fall back down. So what I would tell you to do is look over here, wait for the stochastic to turn down on you, and go ahead and swing trade this and try to make some money going back to the 200 days from a short. From a long-term perspective, your stochastic is getting rather high. And if we just look here, we're just consolidating for the past, since basically the fall began, we're just consolidating between 345 and 325. So I think you're going to stay in this range and just keep bouncing up and down until something happens and the market gives one direction or another. Let's go and look from a 15-minute chart perspective. Facebook's always a good chart, stock to trade from a 15-minute perspective because it gets that daily movement. Today, right now, if you are looking at this in real time, you can be going long on this when you get an engulfing candlestick. So right now, if we were to get a candlestick like that, taking out the previous candle, you can take a long position here and make some money in the short term on a 15-minute chart day trading basis. So if you guys want to learn more about day trading, Paul and I are going to be starting this day trading together and broadcasting it to the Bid and Ask Nation. So if you want to join the Bid and Ask Nation, come and join me. You get the Trading 101 series, which is all of the rules that you need to be successful from any rule perspective that I just showed you, long-term, short-term, or day trading. You get the Employed Trader series, which is 6 stocks that I go through on a daily basis and update you and take out the legwork for you. You get my exclusive monthly seminars, which I do 1 Saturday per month. It's an open Q&A just to the Bid and Ask Nation. You get the chat community of 950 plus people that all have the same goals as you. Come and join us.
We will certainly keep you updated as the metaverse expands and that Facebook stock price. Paul, I'm interested. Obviously, when we say no to a lot of companies over the years, I'm always interested when you like one. So let's look a little deeper, and of course, we'll keep you guys updated as viewers. Thanks for watching. Get the software; you'll love it. See you next video.